Hey everybody, it's Tyrone Jackson, the Wealthy Investor, and thank you for taking a little time to join me on this video on selling covered calls. I just want to point out, if you've ever seen me on television in any of my radio or TV talk show interviews, or if you're a member of the Wealthy Investor Program in Los Angeles or New York, you know that covered calls is our core strategy. It's how we make our money, both in our retirement accounts and what we call our cash accounts. Now, my good buddy Jim Cramer, who I absolutely 100% love, he really hates covered calls. But I'm here to tell you that covered calls is the single most interesting, reliable trade for self-directed investors. So, if you're not a covered call writer and you're handling your own money in the stock market, you really need to know how to sell cover calls. And the particular type of cover calls we're going to cover here tonight is the out of the money. You know, cover calls come in three flavors: in the money, at the money, and out of the money. All right. Now, if we want to reduce our risk in the stock market, we want to start as a covered call writer, like we do in the Wealthy Investor Program, which is with Dow components. Why? The Dow component I've selected here is a company called DuPont. You see, the goal to be a good covered call writer is to have the stock brought away from you. And I'll talk about this in some other videos, especially if we're using margin, like our broker's money to sell covered calls. We want to get the stock, sell the option, take in that guaranteed money, and have the stock brought away from us. You notice this is a company called DuPont. It's one of the Dow 30 companies. It closed today at $66.90, up slightly today. But here's what's really important if you want to be an excellent cover call writer and make thousands of dollars a month. It basically goes like this. Do you see this strong uptrend? This stock is in a strong uptrend. In other words, it has a tendency to rise. Now, you know my favorite saying in the Wealthy Investor Program: we don't marry stocks, we only date them. We're not going to fall in love. We're not going to get to know their whole families. It's only a date. This date may last 3 or 4 months or 6 months, but it's only a date. Pay attention to this section down here. You'll notice that the 52-week range is what? $43.23 to $68.82. Okay? When a stock sticks close to its 52-week high, usually there's conviction on Wall Street that allows it to stay at that level. You do not want to be writing cover calls on stocks that are not in strong uptrends with weak earnings. That stacks the deck away from you. And when we stay with Dow stocks like DuPont, we're stacking the deck in our favor. So we're in April now. So if I was going to buy the stock today at 66.90, right? I have to own at least 100 shares of the stock. That allows me to sell what's known as one contract. And because the stock is in a strong uptrend, I'm going to sell an out of the money call, at the 67 strike. So if you're new to cover calls, you can think of it this way. If the stock is at $66.90, would I be happy? Would I be willing to sell the stock to someone at a profit? This is someone I don't know. Am I willing to sell the stock to someone at a profit? The answer, of course, is yes. And here I'm going to sell the stock at 67 cents, and this option expires May 9th. Now, in the stock market, when you buy something, you buy at the asking price and you sell at the bid. Notice the bid. What the market is telling me that the 67 strike is actually going for, it's $1.21. $1.21. So again, let's summarize this. The stock is trading at $66.90, right? I'm going to sell the 67 strike call out of the money for $1.21. Now, this is really important. Pay attention to this number. It's really important. In the Wealthy Investor Program, we like out of the money calls that are 70 cents or higher. I can't get into all of it now, but it has to do with your monthly rate of return and how to get 2 to 5% on your money every single month, et cetera, et cetera. But this call premium actually fits that criteria because it is $1.21. If I were buying 100 shares of stock, DuPont Strongwood Uptrend Dow stock, for $66.90, would I be happy selling the stock to someone at $67? Yes, that is a profit. It's $1.21 per share. So if I put up $6,600, almost $6,700, I'd make $121 for selling this option to someone I don't know, giving them the right to buy the stock away from me. Most people in our society don't need stocks that rise. They need monthly residual income. And that is the concept that I will champion as long as I'm teaching, is that more monthly residual income, the better your life would be, because your investments would actually be making you money every single month instead of just sitting there and bragging about how cheap you got the stock. You'd have income coming in every single month, $1.21. But here's where it gets really exciting. On 100 shares, 66.90, I make $121. But you see, when I'm trading with 1,000 shares, it's really great, 300 shares or more. When I'm trading with 1,000 shares, this becomes what? $1,210 guaranteed. Why? Because I take this 121 multiplied by 1,000 shares. That would bring me $1,210 in guaranteed income. This call premium that you're looking at is income I can pull out of my trading account to do anything that I want, to pay a bill, towards my vacation, to pay my cable bill. And you know what I always say, if you've got a $1,200 cable bill, you have the really good channels. But the idea is that the stock market is bringing us money month after month after month in this covered call premium. Now, watch how powerful this is. And if you're a negative person, you'll disagree with me. But wealth building is all about having an open mind and seeing things that you didn't see before. If DuPont, for 3 months, let's say, really struggled to get to 67, and it didn't cross 67, I could take call premiums like this month after month after month. In fact, after this one expires, I could sell the next out of the money call, right? When you have residual income in the form of covered call premium, covered call income coming in every single month in a strong trending stock, that's a lot of money. Because if the stock never crossed $67 for 10 months, I'm dealing with 1,000 shares here just for illustration purposes, that would be $1,200 a month that I'm making off a stock that never crossed 67. Or in 10 months, that's $12,000. Now, most of you who are listening to me right now could use an extra $12,000 off a stock that's in a strong upward trend that you never sell. Let's go back and let's just review the power of the out of the money cover call on a stock that is upward trending. Again, if you're starting out as a cover call writer, stay within the Dow. Notice that the stock is in a strong trend. Even if it pulled back here, right, I would still be able to sell out of the money cover calls. The stock has a tendency to rise and go up. Why? Because I want monthly residual income. I'd be in a stock that also pays a dividend, that also has strong institutional money invested in the stock, because they're the ones who's pushing the stock higher. And for those of you who know, I'm familiar with how I teach, we like these big float stocks, these stocks that have these, billion share floats, because they tend not to drop so much when there's a issue in the market or some negative geopolitical event. All right, I don't want to get too ahead of myself because I love stocks so much I can just talk all day about them. Let's just do a little bit of review. DuPont is an interesting covered call candidate. Why? It's in a strong upward trend. Has it always been that way? I love this about Yahoo Finance. Click on the 2-year chart. They say a picture is worth 1,000 words. A picture is worth 1,000 words. Look at the 2-year chart. Someone is going to say, well, the stock dropped here, and how could you make money? You would sell out of the money calls and collect dividends. But notice this was a temporary glitch in the market, temporary pullback, stock in a strong upward trend. Watch this. For 5 years, look at the stock's performance. We have some dips, which means we still sell out of the money calls and collect guaranteed income month after month after month after month. Selling covered calls is the single best trade for the retail investor. Even if my good friend Jim Cramer does not agree, Tyrone Jackson, the wealthy investor, does. Why? Because there's a high probability in your life that you will need more what? Residual income month after month after month. Hey, listen, if this video has helped you get some clarity, or you have some comments, please feel free to post, but make sure you subscribe to my channel. I've got more videos coming at you. My hope is that at some point you join us at a live event in New York or Los Angeles, or you visit thewealthyinvestor.net. But in any event, I have more videos to come. Thank you for spending this time with me, and I'll see you soon.